Good afternoon, guys. It's Saturday, March 19th. My name is Dave Coker, and this is the week ahead. And you know the routine by now. 7 slides, 7 days. Let's just talk about finance, and I'll tell you what me and my buddies are up to on the Telegram channel. So once again, we'll start off by taking a brief review of the markets. And SPX, S&P 500, a strong rally. My gosh, up 6.16% on the week. It's actually done up about 6.36 year to date. Down about 6.36 year to date. The VIX traded down to 2387, a little bit more calmness in the markets. The 10-year closed the week at 2.15 on the back of the Fed rate hike, of course. Oil closed a real whipsaw ride with oil this week, closed at 103.63. It's still up about 38% year to date. So what's going on? Well, the Fed is clearly on a mission to tame inflation. They've said as much. We saw a 25 basis point rate hike last week. Consensus seems to reflect we'll top out at 2.75% over the next 2 years. But who really knows for sure? Clearly, the Fed would prefer to see inflation tamed by growth in supply and supply chain adjustments, but it isn't going to happen, or it isn't happening fast enough. So interest hikes are on the agenda, and they're not always bad for stocks. Let's look at the last 2 rate hike cycles. So in 2004, 2006, we had 17 hikes, and S&P 500 was up some 16% over the horizon. In 2015, 2018, we had 9 hikes, and the S&P 500 was up 28% over the horizon. So keep the faith. Stocks are still a good long-term play. And the market seems to be stabilizing. Now that the Fed's drawn a line and the uncertainty of rate hikes is gone and it's being replaced by certainty, Russia-Ukraine is still a concern, but it's starting to look more like a drawn-out quagmire than a regional explosion. Now, that doesn't excuse, I don't really approve of this, but it is what it is, and the market seems to be drawing that conclusion. And we're clearly optimistic when it comes to stocks going forward. Now, let's just start to look at what's going on overall. Again, just some stuff we talked about. As you guys know or may not know, I tend to look at AIQ every quarter and see how it's done. There's an awful lot of hype about AI, and a lot of it seems to be driven by people that have just gotten into programming, fintech, and artificial intelligence over the past 2 to 3 years. No real history there. I have been programming since 1980. I worked in AI going back in the late 80s, early 90s, and I'm very switched on with the field. And no, I don't believe it. Now, let's take a look at how AIQ is doing. 1 month performance, S&P 500 down, probably up 14.06. The Qs, the NASDAQ 100 essentially up 12.79, and AIQ down 3.04%. Now, keep in mind, guys, that there's a 75 basis point expense fee. So really, the AIQ is down almost 4% over the 1 year horizon when we're looking at S&P 500 and the Qs. Top holdings, you can see what's going on there. Now, the thing with AIEQ is it's built on IBM's Watson, and it cannot tell us why it selected certain stocks or sold certain stocks, things like that. So it's a little disturbing when you look at the performance, a little disturbing when you look at the cost, and a little disturbing about all the hype. So yeah, should we let the bots trade? Well, the bots are trading about 85%, maybe 90% of U.S. Trading volume on NYSE and U.S. exchanges in general is automated trading, bots by another name. So yeah, the bots are trading, but I don't think they're super good at it. At least in this case, we don't think. They might be good for the various funds that are employing them directly to manage their books. But now, here's something that we started talking about. My God, I can't remember who put this up. It was absolutely incredible, though. Take a look. We've got revenue, and this is back in 2020. So we got revenue for various tech companies. On the right-hand side, we got Snapchat, about 2.5 billion, Shopify, roughly 2.93, almost 3 billion. On the left-hand side, Tesla, we're calling it a tech company, 31.5 billion. Netflix, 25 billion, and AirPods, 23.05 billion. Now, who is AirPods? That you ask. Well, this gets back to that Apple is a safe haven argument that I've been pushing. Yeah, this is just one product from Apple, AirPods. Absolutely amazing when you see that they're selling more AirPods than Adobe's total revenue, Uber's total revenue, and so on. Really, really interesting. You still got to figure out in this era where you're going to be putting your money. Really nice chart. Once again, this came off some research from Goldman, and we got real returns from 1802 to 2012, and you can see it broken down by asset class and the annualized returns. And overall, you're better off in stocks. Stocks annualized 6.6% return, and it compounds. And look what happened if you're sitting in cash. Even you're just going to be losing money there, even with getting returns on from interest and things like that. It's just not really good. Gold has its day sometimes. I have a big position, as you know, in gold, and gold over the horizon 0.7%. So clearly outperformed by stocks. But there's been periods when you would have been better off holding stocks than perhaps bonds, bills, T-bills, or especially cash. Now, when we're talking about stocks, it's important to understand that all stocks aren't really equal, even though sometimes the metrics, the valuation ratios might be equal. Here's a pretty funny one. We know that Chinese tech stocks have been getting hammered, and Alibaba, check out their price to sales ratio. On the left-hand side, you can see it was really lofty going back to 2015, I believe it was. We're basically north of 24. I think it was 24.75. Down here now, we're at 1641. It's pretty much the same as Campbell's Soup, 1.568, which is, of course, a consumer staple company. They make soup. I thought this was funny. It was actually interesting. So, of course, I had to look at the performance of the company overall when I heard that. And yeah, I don't like IPOs for a number of reasons. This is one of them. Actually, this is like the worst thing possible for me because not only is it an IPO, but it's a foreign country. It traded in the States, but you're talking about a foreign entity. And my gosh, look how bad it's done over this period of time. If you traded in and out, you might have made some money. But I'm a buy and hold kind of guy. I tend to like to buy and just hold on. Yeah, this wouldn't have worked for me. Would it work for you? I don't know. Think about it. But in general, I would advise you guys to avoid IPOs and think about where you're going to be putting your money in this period of hyperinflation, or I should say high inflation. We're not really there with hyperinflation yet. Here's an interesting one. What we're doing here is from Bank of America, and we're looking at real assets and we're comparing them to financial assets. We're calculating the quotient, in other words, the ratio. So we take real assets and divide them by financial assets, and check this out. You can see that real assets are tremendously undervalued compared to financial assets. Flip it around. Maybe financial assets are a little overvalued, entirely possible. It's been a downhill stretch ever since the war on inflation started, and we can see it all running down. And I like real assets. So I've got gold, I've got silver, I've got art. I do buy art. Just bought some art today. We're at some galleries in London. Bought a bunch of art today. And property. Love property. So yeah, you might want to think about putting your money into some real assets, or you could actually think about, and you knew we were going to talk about it. Oh, I'm sorry. We haven't been properly introduced. My name is Dave Coker, and yesterday, being Friday, I bought Bitcoin as one does. I buy Bitcoin every Friday. I've been doing it for years, and please don't confuse it. I'm not buying one Bitcoin every week. Somebody actually PM'd me and mentioned I must be really rich, and no. I buy a fraction of a Bitcoin, but I spend the same amount of money every week and buy a Bitcoin. And once again, this is from Plan B's stock to flow model. And he's actually forecasting, he's got some very bullish forecasts into 2023, 2024. Will it happen? I tend to believe it will, but I'm not buying because of that. I'm just buying because I believe Bitcoin is an incredible asset. It's really not well understood, even though I do my best with my podcasts and my flash news, fintech flash news, my blog, as well as other things that I do. I try to help people understand. But yeah, it's interesting when you think about Bitcoin and what goes on with Bitcoin in terms of the fact that there only be 21 million, and we've already mined about 19.7 million Bitcoin. Now, this is an interesting one. I can't recall where this came from, actually. I'm not sure who put it up and even if they cited source for it. But horizontally, we got time. Vertically, we got value. Baseline, everything at 100. And you can see vehicles, buildings, equipment, depreciating assets. My God, I can't believe people are dumb enough to spend all this money on cars. Got a guy at the university that I work for. He actually mentioned he's looking at some higher end, sports cars, 100,000 pounds. My God, have fun staying poor. That's all I got to say. Inflationary assets, fiat currencies, airline miles, scarce assets, gold, land, some art, collectibles, tend to do a little bit better than inflationary assets, which does better than depreciating assets. Equities, here we go, better than scarce assets, but Bitcoin. Look at all the pluses for Bitcoin. It's a scarce asset, without a doubt. Scarcity is increasing. Oh, yes. And we're in the early stage of adoption and growth for Bitcoin. So that's one of the reasons why I buy Bitcoin every week And no, I'm not selling any Bitcoin. I've never sold, well, actually, that's not true. I have done 3 small sales just to set up, just to test that I could sell if I wanted to. Because remember, my Bitcoin is all held in a non-custodial wallet. In other words, it's not sitting on an exchange waiting for that exchange to get hacked. I buy it, I bring it into my wallet, and it's done. So I've never really sold any. I just tend to buy and hold. Why? It's all said here, right? It's a scarce asset. Scarcity is increasing, and we're in the early stages of adoption. Okay, guys, that's it for this week. Once again, you're going to have an excellent week. Make sure you set some money aside. Make sure you invest. Hold on to those assets. Don't be tempted to sell. And if you're going to invest in things that, like I do. I love cash flow generating assets, property, dividend paying stocks. Yep, rock and roll. Even though I do have gold, which carries a negative yield, and Bitcoin, which carries 0 yield, I also have property, rental property. So try to think about investments like those. Take care, guys.